got a side hustle, even a small one, then you're going to want to pay attention. The IRS is really dialing up its focus on money earned outside a regular job, and a lot of people are making some pretty common and costly mistakes. So let's break down what's happening and how to make sure you stay in the clear. Okay, here's how we're going to tackle this. First up, we'll define the new reality and figure out what actually counts as side hustle income. Then we'll dig into the problem, why the IRS is suddenly watching so closely. After that, we'll cover the pitfalls, 4 really common tax traps. And finally, the part you're probably waiting for, the solution, your simple game plan for compliance. All right, let's kick things off with the absolute basics, just to get everyone on the same page. This is really the first question you've got to ask yourself. And you might be surprised at just how broad the IRS's answer to that question really is. So here it is in plain English. We're talking about any money you get outside of a normal W-2 paycheck, from a regular salary job. If you provided a product or a service and got paid for it, that's income. The big takeaway here is that it doesn't matter if it was occasional, part-time, or even just a hobby that made you some cash. If money changed hands, the IRS sees it. And this covers a huge range of activities. We're talking about gig work like driving for Uber or DoorDash, selling stuff on Etsy or Facebook Marketplace, any kind of freelancing like coding or design, and yep, even money you make from YouTube, TikTok, or sponsorships. And here's the crucial part. Payments you get through apps like Venmo or PayPal, or even good old-fashioned cash, it all falls under this big umbrella. So that leads to a pretty fair question, right? Why the sudden crackdown? Why is the IRS paying so much attention to this right now? Well, the short answer is technology. It's just changed the whole game. Every platform, every marketplace, and every payment app you use creates a digital trail. It's like leaving a perfect set of breadcrumbs, and that clear, permanent record makes it incredibly easy for the IRS to see exactly who got paid what. And here's how they actually do it. It's not some agent digging through paperwork. It's an automated matching strategy. The platforms, think Uber or Etsy, report what they paid you directly to the IRS. Then you report what you earned on your tax return. A computer program then compares those two numbers. If they don't match, an automatic flag goes up on your account. It's systematic, not random. Now, understanding that automated system is key because it leads us right into the 4 most common and, frankly, costly traps that people fall into. Let's break them down. This is by far the biggest one. The belief that, I only made a few bucks, the IRS won't care. But here's the reality. With an automated system, visibility matters way more than size. If a platform reports paying you $2,000 and your tax return says 0, that mismatch sticks out like a sore thumb to the computer. It doesn't care about the amount, it just sees a discrepancy. Trap number 2 is all about relying on those tax forms. The thinking goes, well, I never got a 1099 in the mail, so I guess that income is off the books. But that is absolutely not how it works. You are legally required to report all of your income, whether you get a form for it or not. Telling an auditor I never got the form just won't fly because the responsibility to report is 100% on you. The third trap is this idea that cash is king because it's invisible. And this goes for physical cash and for those quick transactions on payment apps that feel just like cash. While a single dollar bill itself is hard to track, the way most people use cash creates its own trail. Making consistent cash deposits into your bank account creates a very clear pattern. And in an audit, those are exactly the kinds of patterns that agents are trained to spot and question. And the final trap is mixing your personal and business money. When all your side hustle income and all your expenses are running through your personal checking account, it just creates a total documentation nightmare. You forget about legitimate business expenses, which means you end up overpaying your taxes, or you just guess at your numbers, which means you're probably underpaying and putting yourself at risk. It's a mess either way. By the way, if you find this overview helpful, please consider subscribing to the channel for more concise market updates. Okay, so we've identified the problems and the pitfalls. Now let's get to the most important part, the solution. And this is all about taking back control with a simple, actionable playbook. Here is your 5-step playbook. Number 1, track all your income yourself. Don't wait for forms. A simple spreadsheet is perfect for this. 2, separate your money. Open a dedicated checking account just for your side hustle. This is a game changer for clarity. 3, keep basic records of everything. Invoices, receipts, you name it. 4, document your expenses as they happen so you don't have to guess later. And finally, number 5, use any 1099 forms you get as a way to confirm your own records, not as a single source of truth. And this table shows you exactly why this stuff matters so much. Let's say you make $6,000 and have $4,000 in legitimate expenses. If you're organized, you report correctly and pay tax only on your $2,000 profit, that's about $500. But if you're not organized and don't track your expenses, the IRS only sees the $6,000 in income. They'll demand tax on the full amount, which could be $1,500, and then you're stuck with the stressful job of trying to prove your expenses after the fact. So the bottom line is really this. The IRS has fully adapted to the modern gig economy. This isn't about being scared, it's about being organized. The people who get into trouble aren't always trying to cheat the system. A lot of the time, they're just the ones who are disorganized and figure they'll sort it all out later. Ultimately, this isn't about the fear of an audit, it's about being in control of your own finances. So the real question is, are your records putting you in the driver's seat? If this update raised a question or insight for you, you're welcome to share it in the comments. Thanks for watching this video overview on 15 Minute Investor.